What's up, everyone? This is Invest Tay here. Today, I'm going to share my personal thoughts on SoFi stock with a particular focus on its valuation. As of today, February 6th, SoFi is trading at around $21 per share. The stock has recently gone through a heavy sell-off and is still feeling pressure from the broader market downturn. So yeah, RIP to my investing account since SoFi is currently the largest positions in my portfolio. But fortunately, I've been dollar cost averaging into SoFi for a long time, so I'm still up a bit overall. With that said, let's dive in. Okay, before we talk about valuation, we need to answer one simple question first, which is SoFi a legit company? Or is SoFi actually a strong growth company that can generate a real profit? To answer that, we're going to use a simple metric called the Rule of 40. Think of the Rule of 40 as a quick health check for growth companies. It simply adds two numbers together, how fast the company is growing its revenue and how profitable it is. If the combined number is 40% or higher, the company is generally considered healthy and well-balanced between growth and profitability. According to the most recent earnings report, SoFi posted a Rule of 40 scores of 68%, which is remarkable. But what's even more important is how they actually got there. Previously, SoFi's high score was driven mostly by rapid revenue growth, but now we're seeing much better balance between revenue growth and profitability. SoFi is generating roughly a 30% margin while still growing revenue in the high 30% range at the same time. That combination is phenomenal and extremely rare, so I'll give you an example. For context, companies like PayPal, well, first of all, I feel you for all PayPal investors, but PayPal operates with a solid margins in the low 20% range perhaps, but their revenue growth is closer to higher single digits. For like JP Morgan, like traditional banks, may generate decent margins, but their revenue growth typically sits in the low single digits. So yeah, very few companies are able to deliver both high growth and high profitability at the same time. So another important point is that SoFi has historically been valued by the market like a traditional bank stock. But metrics like the Rule of 40 clearly shows that SoFi actually deserves to be valued more like a SaaS or technology company. This matters because companies that demonstrate strong growth and expanding margins tend to attract more long-term institutional investors. As SoFi continues to prove this balance quarter after quarter, I know for sure that the market narrative will begin to change. And that's when valuation expansion typically follows. Now let's take a look at SoFi's guidance. The company is currently targeting approximately $4.655 billion in adjusted net revenue for 2026, which equates to about 30% year-over-year growth, along with adjusted diluted EPS of roughly 60 cents. They also provided long-term guidance through 2028, calling it for at least 30% annual revenue growth and 38 to 42% annual EPS growth. So yeah, they're basically planning to grow like a maniac for a long time and have no intention of slowing down. And as you guys already know, SoFi managements tend to send back their expectations, so I could realistically see growth closer to 40% for quite a while. Okay, so here is my revenue model for SoFi over the next 5 years. In my opinion, this is more of a base, and honestly, it's somewhat bearish. Anthony Noto tend to be conservative with guidance, so here I will intentionally stay conservative here as well. For revenue growth, I apply the company's guided 30% year-over-year growth, which get us to approximately 4.65 billion in 2026, 6.05 billion in 27, 7.87 billion in 28. And as the business grows, I assume revenue growth gradually slows down. Again, I'm being more bearish here. I used 20% for 29 and 15% growth for 2030, which brings SoFi to roughly $10 billion in revenue by 2030. But to be honest, my dudes, I personally believe SoFi could reach $10 billion in revenue by 2029. Okay, now here is the highlight of today's video, which is SoFi's potential future stock price. I used a simple PE-based approach starting with projected GAAP EPS over the next 5 years. This is based on management's guidance that adjusted EPS is expected to grow around 40% annually through 2028, and I then tapered that to 35% growth for 29 and 2030. Based on those assumptions, I arrived at roughly 60 cents EPS for 26, 84 for 27, 1.18 for 28, $1.59 for 29, and finally $2.15 for 2030. With the kind of growth and continued margin expansions, I personally believe SoFi deserves a PE multiple in the at least 40 to 50 range, at least until management clearly signals a meaningful slowdown in growth or margin. Using that framework, I get a stock price of roughly $30 this year, about $45 in 2027, about $60 in 2028, $80 in 2029, and finally $107.50 in 2030. Well, that's all I wanted to share today. Thank you for watching, and I'll see you guys in the next video.